Yo, what's good? You are now tuned in to Options Gang Radio, man. Shouts out to the Options Gang. You know what I'm saying? We took a little bit of L's this week, you know what I'm saying, off those X and Tilray puts. My bad on that. We gotta come back up. I definitely still think if you had your Tilray puts long term out, I still think there's a chance you can recover off them. I still got a couple of April 9th that expire at $8 puts that expire on the 9th. So I think those are probably going to be up today, hopefully, if they continue moving. But I think there's still a slight chance on Tilray. The X puts are definitely, I think they definitely good. Now, you know, I'm going to say this disclaimer. You saw that pop on X yesterday. Even though Bank of America downgraded X to about like $3, I think it was like $3.50. You saw that big pop up in X because now, obviously, the government got to keep spending. So right now, they're floating the whole idea of a massive infrastructure program, which honestly America was due for anyway. So that's actually a legitimate way to actually start spending to boost the economy. So I don't necessarily disagree with that, but now, so when you got something like a bailout, especially when they're giving all this money to corporations, and not most of it didn't really go to taxpayers, most of it was really for like the corporate bailout side of it. That's a lot easier to distribute than a massive infrastructure plan, because now what happens when you have the massive infrastructure plan, you have all the congressmen from the House and the Senate are all going to be fighting for their share of the pot, because you're gonna say if the infrastructure plan is $2 trillion, that has to be distributed amongst all the districts. So everybody's gonna want their railroads fixed, their airports fixed, their highways fixed, and that's gonna be much longer and much more drawn out process. So if you're trying to play the speculation on U.S. Steel based on the infrastructure program, I think it is a play that could be made, but you have to have a way longer time horizon. I think this short-term bump was just that short-term bump. And yo, what's good? Who's that? I can't even see right now, man. I'm kind of far from my phone, but what up? I saw somebody say what up. But yeah, we doing this podcast, this episode a little lot different because I'm doing it on IG Live. Usually I just pre-record them and put them out, but right now markets due to open in a few minutes. It's 9:07, so they should open in another 23 minutes. So this episode will probably cross over into market open. So I guess it's something different. We could try, talk a little bit while markets are going. Right now, Dow futures are down 3.4%. S&P futures down 3.3%. NASDAQ futures down 2.7%. So it's looking like the market is looking to open down. And speaking of opening down, everybody who's already in Options Gang is already familiar that a jig was coming. They were told about this from over like 2 weeks ago that a jig was on the horizon. And what you're seeing right now playing in the markets is the actual jig. I mean, there's no news coming out that's improving in terms of our coronavirus situation, in terms of quarantine length, et cetera, but you got the market surging back up. Now, there's a lot of reasons for it happening. You got the government injecting record amounts of liquidity into the market, and we could go in depth about what that liquidity actually is, because a lot of people don't really understand what it means when the Treasury does quantitative easing, et cetera. So I probably one day we'll do an episode where we kind of go in depth on that. That whole process and all these different mechanisms they use is like a whole episode in itself. So we're not going to get too deep into that. But what you're seeing is there's no fundamental reason for half of these stocks to be doing good. I mean, when you see this company like Zoom going up or Microsoft going up, I mean, obviously they have, I think Zoom is seeing a tenfold increase in active users. Microsoft is like a 800% increase. So, I mean, the Zoom 50% boost, although it's still not justifiable by the amount of people that they gain, still makes sense in the long term if you're banking on potential. So, some of these moves are justified, but overall the entire market move, this isn't really justified. So that's another reason why I always tell dudes, when you trade it, less is more. Like, you do not have to make a million plays, and it's more than often better when shit is just moving like just a little too weird. yo, take a break, take a week off, you don't have to trade this week. If you make one trade and you up 30% for the month, like, you could take the rest of the month off if your goal was to be your portfolio to be 30% up for the end of the month. So it's like, I think a lot of people get caught up in the trap where they're trying to be like the best trader, and they associate activity with quality. So you think, oh, if I'm doing more activity, if I'm doing more trades, I'm like doing more buys, doing more sells, I'm doing more. But most of the time that's not the case at all. Most of the time you over trading yourself into a L. So, you know, a couple of people hit me on messages, you know, talking about, you know, issues with their portfolios based off the last 2 plays. And I'm like, you know, fam, like, we just went like damn near 2 months straight with every play hitting, not even hitting our main target price. They were going to like God levels. Like, if 2 plays put your whole portfolio under, fam, that's on you, son. Like, you not leveraging your shit right. You bet the bank on 1 play, and that happened to be the play that doesn't hit. Again, I never told niggas I shoot 100%. And nobody, if anyone tells you they shoot 100%, they lying. Even if niggas tell you they shooting at an 80% clip, that's like really unrealistic. You can have a run like, you know, like I just did the last 2 months, but dog, you can't, like, even an 80% clip over the year, that shit's impossible, fam. It's not. But what you can do is make smart trades and just stay out during the times when shit is all fucking wacky. So, speaking of wacky, I wanna this episode, so earlier this morning, you know, I sent a message into Options Gang. I told dudes that I believe this might be the beginning of the end of the current jig. You know, I want to clarify that we are not just gonna go, whatever that bottom we saw is not the real bottom. And I'll firmly say that, even though a person could never predict what the bottom is, I know whatever the fuck that wasn't the real bottom. And I'll actually go into explaining why I believe that. But 2, we're not going to just get to that new bottom or even back to the previous bottom that we just hit in a straight fashion. Like, it's not just going to go like straight in a straight line, like a straight angle slope. There's going to be some retracements. There's going to be some kickbacks. And what you got to understand is, like, time horizon, a lot of people don't understand what time horizon is, because a lot of people, when they're trading and investing, especially retail investors, they need the money right now. Like, you got to understand, most of the dudes with real money don't need to move. Like, Berkshire Hathaway was sitting on a cash pile. People didn't understand why they kept selling equities during the last 2 years and building up a cash pile. So now Berkshire Hathaway, I think their cash pile currently, and this is just liquid cash that they could, it's like $180 billion. So they could literally buy out several top corporations, including Starbucks. I think that's enough to buy McDonald's. But again, this is just what they have in cash. So Berkshire Hathaway is definitely on the extreme of that conservative, you know, waiting for the right time investor. But what you do have is you got a whole bunch of regular hedge fund niggas that they may not have that much in liquidity, but they got bread in liquidity. And the thing is, if you were just about to buy Tesla a month ago when it was at 700, right now Tesla's at 500. If your time horizon is 10 years down the line, these are all discount prices, and what you're gonna see and why these retracements happen is because a lot of the real market makers, dudes with real money, aren't waiting for a quote unquote bottom. If their horizon is 10 years, this whole from when it hit the bottom to now, and even when it gets in, this all is discount season for them. So even if you look at, like, even if you take the person that went all in the day before Lehman Brothers, said they were, filing, going out of business, because they didn't really go out of business, whatever. But when Lehman crashed, let's just say when Lehman crashed, if you had went all in on stocks the day before that, took all those L's from that whole, 08, 09 housing bubble, and held everything until now, you'd still be up on all your investments. So if there's anything to really take out of everything I've said thus far, is like, time horizons matter. And if you have that type of time horizon, everything is on discount right now. And you don't need to quote unquote wait for the bottom if you're just investing in strong stocks. And again, all stocks are not created equals. We're talking about the people we know that aren't going anywhere. the people that are going to be here. You know, these long-term stocks, like even a company like U.S. Steel, as shitty as their financials are right now, and they're going to get pummeled even more, U.S. Steel will never go away. Like these are like, that's like a fundamental American economy, you know, not an economy, American company. Even when you look at Boeing Airlines, like shouts out, you know, in the options game, we call Boeing Airlines the white man's chariot. And it's true, like that's the white man's chariot, like the white man's chariot. He's not letting the Boeing Airlines go out of business. So again, when you see these companies taking massive hits, a lot of people with longer time horizons just buying the shit and sitting on it because again, they're not looking to get that money back right now. So a lot of, when you have, and again, these are the people with the bags, with serious major bags. So when you have all that mixed in, that's when you could see Royal Caribbean go up 12% in a day, even though they suspended cruise operations for at least the next 2 months. And Lord knows how their business, how long it's going to take for their business to even get back to normal levels. But they have a 12% pop in a day, because there's some dudes that's like, yo, I don't care what's going on right now. Royal Caribbean is coming back, and when they come back, like this shit is gonna be worth more. And it's as simple as that. It's not even anything technical, anything with charts. A lot of people are just making fundamental calls. Like think about it. If you got a couple mil like to spare, like that you do not want to touch, you just want to leave somewhere, why not buy Starbucks? Why not buy Boeing Airlines? Why not buy even Royal Caribbean Cruises? I mean, Royal Caribbean, I will put on the side because we don't really know how the bailout situation is going to work for them, being that those are foreign-based companies and there's not really a strong sentiment to bail out a foreign-based company. Trump has expressed that he wanted to do something for them, but he knows he can't go all out for them. But Boeing Airlines, them niggas is gonna get bailed. Them niggas will get bailed out forever, as much bailouts as they need to keep going, because again, Boeing Airlines is the white man's chariot. So you just gotta respect certain companies' fundamental positioning in America. Like they just not going nowhere. And I mean, even a company like Google now at this point ain't going nowhere. Apple ain't going nowhere. Like, so again, even like a company like Apple stores in China is already all open. Their stores in Asia are back open. They're already opening back up their manufacturing facilities. You know, China, they're gonna smudge their numbers. They don't give a fuck how much niggas got corona out there. They blew up a whole hospital that had corona patients just to X dudes out. Like they're mitigating their problem. There's a reason why they can, you know, fudge their numbers and even flatten their own curve, because they'll blow up a hospital with a whole bunch of patients in it. They won't even let them go back outside. So you got to understand, you're not even dealing with the same structure. So a company like Apple that is leveraged in manufacturing wise out in Asia, they're already getting back to capacity in terms of production. But, you know, that's not going to offset the loss in American and European sales. But again, if your time horizon is 10 years from now, none of this really matters. This is all relative. So with this one, so I want to actually take a graph that was in the Laws of Wealth book, and for those of you on IG who don't know, this is like an options gang. My phone is sideways, so I don't know what's right, but this is like an options gang, almost Bible. Like this is like fundamental reading. You know what I'm saying? So since 1929, right? We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We had 10 bear markets, right? Now, from their peak to the bottom, the average is a loss of 45%. And the average duration for all of them is 25 months. So, understand we are in the very, very early stages of even this drop. Even the shortest one in this one was the 1987 crash that lasted for 3 months. And the next shortest was back in 1961. That was a flash crash of 62, and that was 7 months. But even if you look at the tech bubble that happened, that took 31 months to play out. The housing crisis took 17 months to play out. So we're in the very, very early stages of this crisis, and you have to understand why time horizons matter, and you have to factor that into your decision making, because again, you have to understand that there's going to be shit that happens in the short term that doesn't make sense. But in the long term, if your time horizon, if you have that long time horizon, everything is on discount. Even if you're a person that's concerned about, yo, I kind of want to get a better price